Could Donald Trump's comeback weaken the Indian rupee against the US dollar? With Trump's return to the White House, the global economic stage is shifting, and India's currency is already under pressure. The rupee is nearing record lows, and Trump's signature America First policies could accelerate its decline. But what does this mean for India's economy and its position in global markets? During Trump's first term, his protectionist agenda strengthened the US dollar and made life harder for emerging markets like India. Now, as these policies resurface, India faces mounting challenges, from rising import costs to inflation risks. Yet, despite these headwinds, the Reserve Bank of India and the country's growing economic resilience offer reasons for cautious optimism. In this video, we'll explore how Trump's policies are impacting the rupee, the ripple effects on India's economy, and what lies ahead. Stay tuned for insights that could redefine how you view this critical economic shift. Don't forget to like, share, and subscribe to Economy Explorer for more updates. And let's dive in. Trump's America First policies. When Donald Trump first coined the phrase America First during his 2016 campaign, it sent a clear message. His presidency would prioritize U.S. interests above all else. For global trade and economics, this meant seismic shifts. The policies that followed reshaped how nations traded, invested, and even valued their currencies. But what made America First so impactful, and why does its return spell trouble for the Indian rupee? At its core, America First is about boosting domestic industries, protecting American jobs, and reducing reliance on foreign imports. Trump championed tariffs on goods from countries like China and India, raising the cost of imports and pressuring foreign economies dependent on U.S. trade. He also sought to repatriate investments by urging American companies to bring their manufacturing and capital back home. While these measures strengthened the U.S. dollar by attracting investment and reducing trade deficits, they had a domino effect on global markets. Emerging economies, including India, often bore the brunt of these policies as their currencies weakened against the soaring dollar. One of the most contentious aspects of Trump's policies was his aggressive use of tariffs. India, for instance, was labeled a tariff king by Trump, criticizing the nation for imposing high import duties on U.S. goods. This rhetoric wasn't just talk. It led to strained trade relations and a drop in foreign direct investment, FDI, into India during Trump's tenure. Between 2016 and 2020, India's FDI saw slower growth compared to the surge it experienced under Joe Biden's administration. Now, with Trump back in office, these policies are poised to make a comeback. But will history repeat itself? Or will India find ways to adapt and counteract these challenges? The answer lies in how India navigates this economic storm, a story we'll uncover as we dive deeper into the ripple effects of a stronger dollar and a weaker rupee. The Indian rupee's vulnerability. Every currency tells a story, and for the Indian rupee, that story has been a roller coaster of resilience and fragility. Today, it's nearing historic lows, trading at over Rs.84 to the US dollar, a stark reminder of the challenges emerging markets face in the shadow of a stronger greenback. But what makes the rupee particularly vulnerable, and why has Trump's return magnified these risks? Let's start with India's trade dynamics. As one of the world's largest importers of crude oil, India relies heavily on the US dollar for its transactions. When the dollar strengthens, as it has under policies like Trump's America First, the cost of imports skyrockets. This doesn't just strain government reserves, it directly impacts businesses and consumers, driving inflation and making everyday goods more expensive. It's a domino effect, one that hits households the hardest. Ever wonder why fuel prices rise even when global oil costs drop? The rupee-dollar exchange rate is often the culprit. Another critical factor is investor sentiment. A stronger dollar tends to lure global investors away from emerging markets like India, causing capital outflows. These outflows weaken the rupee further, creating a vicious cycle. During Trump's first term, this phenomenon played out dramatically, with India's foreign direct investment growth slowing and its currency underperforming against the dollar. History seems ready to repeat itself. But it doesn't end there. The Reserve Bank of India, RBI, has stepped in, selling dollars from its reserves to stabilize the rupee. While this provides temporary relief, it depletes India's foreign exchange reserves, leaving less room to maneuver in future crises. So, how long can the RBI keep this up? And what's next for the rupee as global pressures mount? We'll explore those questions as we examine the RBI's strategy to defend its currency against the odds. RBI's countermeasures. Picture this. The Indian rupee is on a steep decline, the global markets are in turmoil, and the Reserve Bank of India, RBI, becomes the economy's first line of defense. With the rupee teetering near historic lows, the RBI has taken swift and decisive actions, pouring billions of dollars into the market to stabilize the currency. But how exactly does this work, and can these measures hold the fort against mounting global pressures? To understand the RBI's strategy, we must first look at its interventions in the foreign exchange market. By selling U.S. dollars from its reserves, the RBI injects liquidity into the market, increasing the demand for the rupee and helping stabilize its value. Just last month, the RBI reportedly used over $3 billion for this purpose. It's a textbook response to defend a weakening currency, but it's not without consequences. Each intervention depletes India's foreign exchange reserves, which are currently at a 3-month low of $665 billion. While this might sound like a hefty sum, it's a finite resource that the RBI must deploy strategically. Beyond direct interventions, the RBI is also tightening monetary policy. By raising interest rates, it aims to curb inflation and make Indian assets more attractive to global investors, thereby supporting the rupee. However, higher rates come with their own set of challenges, including slower economic growth and increased borrowing costs for businesses. It's a delicate balancing act, one that requires the RBI to weigh short-term currency stability against long-term economic health. But here's where it gets tricky. The global economic environment is becoming increasingly volatile. With Trump's policies strengthening the U.S. dollar and oil prices remaining unpredictable, the RBI's toolkit might face new tests. Will its reserves and policies be enough to shield the rupee from further depreciation? And how will these measures affect India's broader economic goals? The answers lie in the broader economic strategies India chooses next, which we'll dive into in the following sections. The broader economic picture. In the midst of all the turbulence surrounding the rupee and global market dynamics, it's easy to lose sight of the bigger picture. But the broader economic landscape reveals that India is no stranger to weathering storms. In fact, the country has been steadily climbing the ranks of the world's largest economies, currently sitting in the 5th position and projected to surpass Japan to become the 4th largest by 2025. So, how does India's economic trajectory look in the face of Trump's comeback and a volatile global economy? Let's start with the fundamentals. Unlike many emerging markets that rely heavily on exports to a few key nations, India has worked to diversify its economic base. While the U.S. remains an important trade partner, sectors like renewable energy, technology, and pharmaceuticals have grown to attract investments from other regions, including Europe, the Middle East, and Southeast Asia. These sectors act as a buffer, insulating India's economy from the full brunt of U.S. protectionist policies. Domestically, India's economy is driven by strong consumer demand, which accounts for nearly 60% of its GDP. This internal strength has allowed the nation to remain relatively resilient, even when global markets face downturns. For instance, while foreign direct investment, FDI, into India slowed during Trump's first term, sectors like tech startups and renewable energy continued to thrive, signaling that India's growth story is far from one-dimensional. However, challenges remain. A weaker rupee means higher costs for essential imports like crude oil, which could drive inflation and reduce consumer purchasing power. At the same time, a stronger dollar makes Indian exports less competitive, adding pressure on trade balances. The government's challenge is to strike a balance, stimulating growth while keeping inflation in check. Still, there are opportunities amid the challenges. For instance, India's push toward self-reliance, or Atmanirbhar Bharat, aims to reduce dependency on imports by fostering domestic manufacturing. This initiative not only strengthens local industries, but also positions India as a viable alternative to China for global supply chains. As we move forward, the real question is, can India leverage its strengths to counteract external pressures and continue its upward trajectory? To answer that, we'll need to examine the risks and opportunities shaping India's economic future, which we'll explore in the next section. Risks and opportunities. When the Indian rupee dances on the edge of a record low and global markets are in flux, it paints a picture of both peril and promise. The risks are evident and pressing, but with every challenge comes the seed of an opportunity. Let's break down the threats looming over India's economy and the silver linings that might just define its future. First, the risks. A weaker rupee has far-reaching consequences, especially in a country heavily reliant on imports. Crude oil, the lifeblood of India's energy needs, becomes significantly more expensive as the rupee depreciates. Higher oil costs ripple across the economy, inflating prices for transportation, goods, and services. For consumers, this translates to higher bills, reduced spending power, and strained household budgets, a cycle that can dampen overall economic growth. Meanwhile, industries dependent on imports for raw materials face shrinking profit margins, further compounding economic pressures. Then there's the issue of trade imbalances. A strong U.S. dollar makes Indian exports less competitive, as products priced in rupees appear costlier on the global stage. Sectors like textiles, IT services, and pharmaceuticals, which have long driven India's export story, could face declining demand. Additionally, if foreign investors begin to view emerging markets as risky bets, capital outflows could intensify, leading to further currency volatility and stock market fluctuations. Yet, these challenges also open doors to opportunities. Take India's push towards self-reliance under the Atmanirbhar Bharat initiative. By reducing dependency on imports, India can strengthen its domestic manufacturing base, create jobs, and drive innovation. Sectors like renewable energy, electric vehicles, and technology are already seeing investments that position India as a hub for global supply chains, an alternative to China in a post-pandemic world. Moreover, India's growing consumer market remains a magnet for foreign investors. With a population exceeding 1.4 billion and rising disposable incomes, global companies view India as a key growth market. This domestic demand can cushion the economy against external shocks, providing a foundation for long-term stability. The balancing act lies in leveraging these opportunities while mitigating risks. How can India attract investments, reduce trade deficits, and ensure inclusive growth in the face of global uncertainty? The next steps will be pivotal, as we'll explore how policy choices and strategic actions could shape India's economic future. The rupee's journey is more than just currency fluctuations. It reflects India's ability to adapt and thrive in an uncertain global landscape. With Trump back in the White House, his protectionist policies and a stronger U.S. dollar have reignited challenges for emerging markets like India. Yet, India has faced similar trials before. The 1990s financial crisis brought transformative reforms, and today's economic pressures could pave the way for another wave of innovation. Initiatives like Atmanirbhar Bharat, coupled with India's growing role in global supply chains and robust domestic demand, provide hope. However, this moment demands decisive action, strengthening local industries, managing inflation, and forging new trade partnerships will be key to ensuring the rupee's stability and long-term growth. The decisions made today will shape not just India's economy, but the lives of its people for years to come. If you enjoyed this analysis, don't forget to like and subscribe to Economy Explorer. Thank you for being part of our journey, and we'll see you in the next video.